Good morning and welcome to ClearPath Retirement Radio. I'm Stewart Smith. I'm here with my co-host Mitch Davies.
Good morning.
And we are going to talk today about a topic that we talk about quite often with folks who are relocating to this beautiful area we live here in the upstate of South Carolina. And a lot of people ask, where is the best place to retire? But, you know, Mitch, what they're really asking is a tax question.
It is.
South Carolina is a very popular retirement destination, but you know, it's not tax-free. It's strategically tax-friendly. And what we're going to talk today about is how it is strategically tax-friendly. Say that real fast.
I can't.
And we'll talk about what makes it attractive and what's misunderstood about it. And so let's get into this, Mitch.
Yeah, I'm excited.
So the first thing that I will say that is helpful is there is no tax on Social Security in South Carolina.
That's huge.
So that is a big help to folks who are pretty reliant on their Social Security for their retirement. Yeah. And that is, that is strategically a wonderful thing for those folks to not have to worry about that part. But, you know, what I'm going to say is South Carolina in general is, you know, a very tax-friendly state, but you have to, you know, understand how to structure your income to make those tax benefits optimal.
You do. You know, there's a couple levels of state tax, and we're going to get into the more retirement-focused one today, but you've got, you know, everyone understands there's different sales tax in each state and different general expenses. You're going to have different property tax values and, you know, the general basic things that you look at. But Stewart, there's actually a couple interesting things we'll get into today that are specific for retirement. And like you said, structuring income. And you can get creative with these different rules. And I'm excited. This is going to be a cool one.
Yeah. So, you know, I think one of the things that isn't understood or isn't known really is that there is an extra retirement income deduction here in South Carolina that allows you to get a pretty nice deduction. I think it's about $15,000 per person per year coming off of the retirement income picture there. And it, you know, if it applies to IRAs, 401ks, pensions, things of that nature, and that is a huge help for folks down here in South Carolina and the upstate. And, you know, that can be extremely helpful to those folks who are relocating here from high tax states, and we see it all the time. You know, I think the last number I heard, Mitch, was 75 people a day.
I heard something similar.
Moving into Greenville, South Carolina area.
That's crazy.
We call home. And that is a lot of folks.
Yeah.
And I know that when we do our workshops and seminars, we get a lot of those folks that come because they moved here for the tax advantages and they want to understand how to make the most of the tax advantages that this state gives you. And again, that's kind of what we're going to talk about today. But, you know, it's really just, it starts with the foundation of just lower cost of living.
It does, just lower overall costs.
I mean, we talk to folks all the time who are coming here from states like California and New York.
Right.
And, you know, it's night and day difference.
It's ridiculous.
Guys. I tell you, we're going to give you like some examples of how that would differ coming from those type of states today. And I can tell you that, you know, it is a different world. You know, you can retire with the same income, the exact same income, and come in those states or South Carolina, and you can live a completely different lifestyle.
Completely.
I mean, it is really interesting how that works. So, you know, I would say that, you know, so let's kind of go through it. Like, as far as property taxes go, there is, you know, South Carolina is pretty reasonable.
They are. That's one of the first ones we hear. When people come down, you know, move here, and they're like, look, I was paying on the same house, I was paying 3-4 times as much just to live there, you know, and that's one of the main draws to, you know, the Southeast and that sort of thing. It's one of the first things people look at.
It is, and you know, a 4% assessment ratio on your primary residence here is pretty sweet.
Solid.
You know, 6 on, you know, those you know, non-primary residence, you know, vacation homes and things of that nature, second residences. But that 4% can be very, very attractive for folks who are paying, like you say, 2-3 times that in other high tax states. And not to mention that once you hit 65, you can qualify for the homestead exemption here.
Yeah, it's a big deal.
Yeah, the homestead exemption is a big deal because that knocks, what is it, 50,000?
50,000, yeah.
Off of the tax value of your home, and so that even reduces the property taxes even further. So, hey, you know, for someone on a fixed income, predictable housing costs matter just as much as income taxes.
They do.
So, you know, that can be a big deal. You know, as far as legacy planning here, too, you know, we do a lot of legacy planning. Like we've said many times, we do a lot of trust for folks to help them avoid probate and help simplify things for their family. And, you know, it's really nice to know that there's no estate tax here, no state estate tax, there's no inheritance tax.
Right.
And it makes, you know, wealth transfer much simpler and easier than most states.
It does. This is something you really got to think about, and I think it has a huge factor in why so many people end up retiring into a state like this. We're working with the client right now. She's getting ready to move up to Washington, the state of Washington. And they, you know, the federal estate tax exemption is so high, it's not really a factor for the majority of Americans these days, but Washington in particular, again, for example, has a state estate tax of exemption of only a couple million. So anything over that, you're subject to a state estate tax. And those estate taxes get hefty. I mean, you're talking 30, 40%. So when you have a state like this where there's no state estate tax, it just opens up a ton of planning opportunities.
Right. You always got to deal with that federal estate tax, but it's nice to live in a state that doesn't add to that with state estate tax. So, yeah, that's a great thing. And, you know, if part of your plan is to take care of the next generation, this kind of stuff matters.
It's huge.
It matters more than people realize. The next thing I want to talk about is that state income tax. So it's not zero here. It does exist, but it's, you know, it's not a terrible state tax here, income tax, and it's, you know, when you compare it with the lower cost of living and all the other tax benefits you get here, it's really not a problem.
It's not.
And, you know, I know that they're making moves, and the state Congress has moved to lower that more and more, and I think it's right around 6 right now. But they're trying to push that down over the next few years and get it even lower. So, yeah, again, in the general landscape of taxes in South Carolina, that's really a small price to pay for all of the other advantages and benefits that you get. So, you know, let's press on here. I would say that South Carolina is obviously very tax friendly, but one of the things I will say about South Carolina is you have to understand how to structure your income in South Carolina to really optimally benefit, again, from the tax structure that we have here. We have, you know, some really interesting, you know, deductions and things of that nature, but it also really depends on exactly where you're pulling that income from. So when it comes to like withdrawal order in South Carolina, you have to be really cognizant of how the tax laws are structured here to optimally benefit from it. And that takes planning.
It does. You know, I like to say exemptions create opportunities, right? And when you've got, you know, the government will always rather add an exemption than just reduce the taxes overall, because when you have these different exemptions, when you've got some just for pre-tax money and some for over 65, you've got all these different exemptions that are available. If you don't strategically plan for them, you're probably leaving them on the table. You're probably not taking things in the correct order that's going to allow you to take advantage of these exemptions. So it's extremely important to, A, have a plan that's going to outline how can we maximize this. If you're moving into South Carolina from a higher tax state, how can we shift that income picture to make sure we're being optimal for South Carolina? And how can we make sure we're utilizing all of these? Because this landscape changes every year. I mean, we've seen senior deductions just get added in the past 12 months that have changed the landscape of retirement planning. We see this constantly, and what we're doing every day, Stewart, is monitoring this environment so closely. So it's so critical to have a team around that's focused on what has become so important in tax planning.
And it's so important to understand that in the planning piece of it, because your CPA, your tax professional, and they are great at preparing taxes and getting you deductions. But when it comes to planning and understanding the landscape and really understanding how to structure things from a long macro planning perspective, then you need a planner who really gets this stuff and really understands it. If you have moved here from a high tax state and you're wondering if you are getting all the benefits you possibly can from living in a state like South Carolina, go to our website, ClearPathRetirement.com. Give us a call, 864-775-5033, and we'll have a discussion. Let us take a big picture look at what's going on with you tax-wise.